Bitcoin just hit 6-month low. Ethereum holding on at the $3,000 key level. We got altcoins bleeding across the board. ETF outflows are rising. Look at that IBIT. Whales are selling. Liquidity is starting to dry up. And the latest ISM numbers are actually showing a cryptic sign for the economy if you know how to read them. But here's the real question, okay? Here's the real question. Is this the breakdown that everyone should fear? Or is this exactly the kind of flush that creates the biggest opportunities? Let's break it all down. Let me show you. Welcome back, Crypto Crew. It's your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you like what you see, give us a like. Make sure you hit subscribe if you have not already. And come on over to X and follow us on X, where we talk about Bitcoin, crypto all day there, because we are cryptomaniacs. Yes, we are. All right. Hey, you're in great company. I want to show you something here. This is good news for us, and it's great news for you because you are in good company. Look what's going on here. Good old Paul Barron Network, 1.9 million people, 2 million people follow him. He's using our stuff. He's using our analysis. Pretty cool. Pretty cool. Like I said, you're in really good company, regardless of what you guys are leaving on comments, because I've been reading all the comments, and I'm going to address that today. So a little rant before we get started, okay? Now, here, before we even get into the charts today, I want to address something that I've been reading on the comments. Okay, I'm not angry. I mean, I love the comments. Please keep them coming. I love you guys, especially the guy that wants me to sing at 90,000, and I'll be happy to. I will be singing the Ed Sakota "What You Gonna Do When the Drawdown Comes" song. I'm going to be singing it. I love it. I just got to learn the lyrics because I don't know the full lyrics of the song. But very, very good little song by Ed Sakota there. All right, so I'm seeing some comments. First one I read, these videos have nothing, they should not be 30 minutes long. Okay, if you don't want, good macro and fundamental and short-term technical analysis, go to Tic Tac Tac or Instatrash, get your 5-minute Fibonacci update. Okay, that's all I can say to that. Next thing, I read something. Actually, it was in Spanish. And the guy says, last month you were sending us to heaven. This month you're sending us to hell. I'm not sending you anywhere. I'm just reading what the market's doing. Your position size might be sending you into hell. I don't know, right? But you only show good news for Bitcoin, and then in the short term, you show bad news for Bitcoin. Okay. So let me just try to clear it up. I don't show good news or bad news. I show the market. Now, long-term fundamentals and short-term price action can point in completely different directions at the same time. And that's generally what they normally do, right? So we live in both worlds, okay? And now another thing, you're always trying to get us to join this group, this free group. Okay, what part of free don't you understand? It's a free trading community. Okay, I mean, she compared me to Tom Lee or something. I don't even know what Tom Lee does, but I know he's a big Ethereum dude, right? But I'm just basically trying to point you in a direction. If you want to see how we deploy capital, come on in. It's free. That's all. I don't say anything. I can't say anything more about that. But we live in both worlds. We live in the long-term macro trend world, and we live in the short-term technical cycle world. That's just our world. Now, my job isn't really to be bullish or bearish. It's to be basically accurate on both sides of this thing. Now, the long term, we'll find out if I'm accurate because I believe Bitcoin's going much, much higher. However, short term, yeah, we're in some pain right now. Okay, like I said. It is part, Now, okay, so why do I believe that Bitcoin is heading much, much higher? It's got massive adoption momentum. Okay, it's got ETF flows now. I mean, this whole thing before the ETFs got involved, the BlackRocks, the Fidelity, the Vanguards, before, it was all wishful thinking, I hate to tell you. It was all hopium that this thing was going up. There was nothing really behind it. Bitcoin was wind. That's all it was. It was like, oh, this is a great idea. Oh, yeah, let's get involved in this thing. Wow. It was all wind, brothers and sisters. It's not wind anymore because Wall Street's involved. Now, with Wall Street being involved, it's a double-edged sword. They're going to push this thing around like they push anything around, like they push currencies, like they push stocks, like they push bonds. They have a big wallet. They're very powerful firms, and they're going to do what they have to do to manipulate the marketplace for their benefit. Not your benefit, not my benefit, but it's my job to basically point out short term, long term. Okay, that's all my job is. Now, like I said, we have massive adoption, ETF flows, institutional buildup. We got macro tailwinds. Short term, it still has to work through liquidity pockets, derivative unwinds, bloody, option expiries that are happening because Wall Street's involved. Guess what? Now we got options. Congratulations. You wanted Wall Street involved because you said, oh, that's going to give credibility to this whole market. Yeah, well, congratulations. You got them involved. Yep. So now you got the big boys that are going to push you around. Our job is to help you navigate the pushes and the pulls. Okay? So I'm not flip-flopping on anything. That's how markets move. Institutions plan long term but trade the short term. I'm showing both. I'm trying to show both to the best of my ability. Okay, now I'm 6 minutes in. Okay, that's a lot long. Most videos end at 6 minutes. So we might go a little bit longer today. So those of you that don't like 30, 35-minute videos, get over to Tic Tac Tac or Instatrash. They're there for you. So look, Bitcoin could be long-term uptrend while still correcting 35, 40% in the short term. That's normal behavior. It's not a contradiction. All right? Now, everything we've lived through this last month and a half, the chop, the failed October narrative, the Moonvember memes, the painful sell-offs that we've been going through, it's the price of admission to crypto. And here's the part nobody wants to hear. So get your number 2 pencil out, okay? Bitcoin itself has been up 520% since January 2023. That's 173% per year across the last 3 years. But it only hit new highs 10 out of 36 months. That means 73% of the time, Bitcoin is in chop or I want to puke my position mode. The moments that we go through, if you're long, they feel terrible. If you're a trader, you don't care. Okay, you're trading. You may have because you trade the long term and the short term. You go, yeah, I believe Bitcoin's going up, but hey, it's going down right now, so I'm selling it. Okay, so the moments feel terrible, but they set up for the biggest moves. Professional traders learn to endure what amateurs try to avoid. Amateurs try to avoid the pain. They only want one direction. It doesn't work that way. Like I said, you wanted Wall Street, you got Wall Street. Congratulations. Now you're going to have to learn to trade like Wall Street. That's why we said we offer a free trading group because we're there to help. If you want, you could go to a million different places, but, we offer what we offer, and that's it. And it's free. So what part of free is like that you don't understand? All right. So this is basically emotional capital training, right? I told you it's emotional capital trading. So, let's get into it now. As I said, we're I'm sorry, what are we? We're 9:15 in, and I haven't even discussed charts yet. Oh my gosh. You better hurry up and go over to Instatrash. All right, let's go. Bitcoin itself. All right. We said that Bitcoin itself, I've held on this chart really. Right now, Bitcoin loves the CME market caps. It dropped to a 6-month low, falling below the 95,000 support zone as risk-off sentiment gripped the global market. We got Bitcoin now on the brink of wiping out the gains for the year, sliding along with tech stocks and AI names. That's the issue that we have. Okay. Right now, Bitcoin's trading right around 96,002. 5.6 down in the last 24 hours. 30% off October all-time highs. Yes, we are in a major correction, but we know that Bitcoin loves to fill the gaps. 97,000 is done. Can we fill 92? Perhaps, yes. The final shakeouts are brutal, but once they're done, Bitcoin does the least of what everyone expects. It starts to gain ground again and starts to take off. Now, let's get into the 2 hour chart work. All right, let's do it real fast. Yes, my horizontal lines that people talk about, they were absolutely spot on. They acted as great support, great resistance. Now we're going to set some more up because I had to reset the Andrews pitchfork on the short term. Okay. I told you that Bitcoin needs to hold. This is the main point right there, or else Tom's going to be singing the Etsukoto drawdown song, 91,166. As it stands right now, Bitcoin made a new low of what, 94,000, like two or something like that. Oh, 94,000 even. Okay. Reprieve if we can get above 98,000. So I'm going to draw my little horizontal line that's not really misplaced. Okay, I mean, it's really a good line. I'm going to tell you, watch what happens with this horizontal line in the next up and coming, like, hours or so. Let's go right up to, I'm actually going to say it's going to be 97.7 right there. That's the level of resistance. If we could crawl back up over to this, we have a potential to pop back up to 100,000. Yeah. If we can't, we're going to drive down and we're going to test this low again. If we break the low, we're going to slide deeper to this lower time right here, 91. That's an important point. And the ultimate point right there is that 91.3. So this level right here is what? 92.2. This one's 91. That's a very important point for good old Tom. So as it stands right now, it is Saturday. So market probably going to be pretty quiet, but your level that you need to crawl back above. Yes, this horizontal line is like 97.7. If we can crawl above that, we got a chance to run up to, look, this top right here. Then it would need to consolidate. There's a lot of stuff going on right now. We're going to cover it right now. So if we look, this is something that, I was going to bring up yesterday and I didn't. I forgot to actually show the chart. But here's a signal that really nobody watches. We're talking about U.S. dollar dominance, right? Dollar yen, 154. Okay, sterling dollar, not anywhere near where it should be. Euro dollar, again, it's kind of a laggard. And it has recovered slightly, but it's not anywhere near to knock this off yet. But once we start to see the dollar start coming off, okay, and right now we're right back at a 6% resistance line again. Remember I told you Forex, you usually get like 6% volatility. We're up near the top right now. So we have a potential of the dollar kind of coming off. Every time it tapped this zone, Bitcoin pumped weeks later. It takes a little while to work through. And I'm going to get into, M2 in a second. I saw the comment about M2 as well, and it's a valid comment, and I want to address it, and I'm going to get into it in a second. So it's really time to position and not panic. Okay, so now as I say that, I say, if you want to see how we deploy capital, come on over and get into our free group. Okay? Costs nothing. All right? And I'll show you how to do that later in the video. Okay? Now, as it stands right now, if we look, we have a rare Fibonacci update. We very rarely touch Fibonacci's in these videos. But to make all you guys happy about fibs, we have a very rare fib update. One of the most important fib level, retrace levels there is, the 1.618 Fibonacci retrace. Okay. Every bloody drop looks the same. Okay, you get the same fear, you get the same panic, you get the same X feeds. But if you zoom out, and look, every 1.618 fib has marked a bottom before. Let them sell. Let the market sell. Let retail panic. You position. Now, as you know, we are Wyckoff style traders. Yes, we are. Good old Dickie Wyckoff. And we said Dickie was screaming from the grave. Okay. Now, what we're looking at right now is a phase E confirmation right now. It's played out to perfection right now. We are now deep in phase E where markdown turns into panic. and capitulation shakes out the weak hands. We're looking for the spring, the Wyckoff spring to happen after this. So while retail is screaming for lower prices, the cycle always repeats. The question is, are you going to be ready for it this time? Now, remember, the Wyckoff spring is a very, very important little indication. If we get back up through these lows down in here, we get back up through 100. Okay, so that's what we're looking for. That would be a spring. All right. Now, what's the macro take on this? Before I start jumping over into good old Ethereum, and let's address some things that are really important. Three main forces were driving crypto down. Okay, and I'm going to come on over to this index right here, ISM Purchasing Managers Index. We got investors were rotating out of tech and AI and into high beta stocks. Nasdaq was down 2.3%. Worst session in a month we had yesterday. Nasdaq futures in the pre-market open, they were down like 1%. Horrible. So when tech bleeds, crypto bleeds harder, right? Rate cut hopes were fading. Okay, last week a 67% chance of a December rate cut. Today, 50%. Now, okay, I'm going to get into this now. Why? Well, they got multiple Fed offices. Officials took a hawkish, cautious tone. They have less rate cut optimism, tighter liquidity, crypto risk off sale. Okay, market depth is kind of falling right now. Derivatives positioning is getting to be unwind. They're unwinding derivative positions. Liquidations, of course, were rising. Now, if we're looking at this chart, the ISM Purchasing Managers Index, the market is thin right now, and the market right now exaggerates every move that's happening. But if you start to dig into this data, you could start to see, okay, we have a light at the end of the tunnel, and the comeback always starts when nobody sees it. So, if we look at this, the ISM Purchasing Managers, because this one does matter a bit. In October, it came in at 48.7, okay, down from 49.1. That was below expectations of 49.5. So what this chart is basically saying, below 50 is contraction in manufacturing. It's not great. It actually means the economy is not accelerating yet. Now, here's the silver lining. New orders are now up at 49.4 from 49.8. New orders lead the overall ISM. So when new orders rise, the full index often follows, and this could mean we are turning a corner. Now, we got to keep our eye on it. Okay, it's not something retail looks at. It's it's something that we look at, but we may be turning a corner. So liquidity could improve in coming months. Crypto could benefit once the risk appetite returns. But right now, we are still in a contraction part of the cycle. But the new orders are climbing again, which means we could be breaking out. And every major market began when this started to break upwards. And it could flip really fast. Like I said, markets can turn very, very quickly. So you got to be on your toes. All right. So December might surprise everyone. Like I said, this is what, big money watches. Retail doesn't watch this stuff. It's like getting out into the weeds. Now, I'm going to address, all right, what happened with M2? Tom, M2, you said M2. Bitcoin's going to follow M2. But, M2. Yes, right. I did. What was I talking about? Well, we had a government shutdown, ladies and gentlemen. The one big note to liquidity is that when we had the shutdown, there's absolutely no spending that's occurring. Okay? Now, let me go over this really, really briefly with you. When the government shut down, there was absolutely no spending, right? Make sense? Yeah. Okay. Now, the one thing to note on liquidity is that the U.S. Treasury Department has been refilling its general account. The original target was around for $850 billion, and that has been reached and surpassed because of the government shutdown. Because when the government is shut down, it prevents the executive branch from spending money. Now, the general account is over $1 trillion. So originally what happened was a lot of liquidity was pulled out of the system, and there were hundreds of billions of dollars of government spending being held back. Now that the shutdown has ended, spending will resume and liquidity should expand, which should be bullish. Okay? 20 minutes in. Let's get over to Ethereum real fast. Let's start working through Ethereum. If we look at, oh yeah, we said buy the blood. We're getting ready. So again, you want to see how we're deploying capital in all different cryptos? Join the free trading community. I'll show you how to do that in a second. Let's move on over to good old Ethereum. Ethereum itself. All right, make or break level. Tom, Ethereum should be going to $10,000. What happened? Okay, a little bit of a detour. Okay, it's a little bit of a detour because of what's happening in Bitcoin with Bitcoin dominance. But Ethereum is holding up pretty well, sitting right now at 3,100. Main support, 2,800 in Ethereum. Okay, but really, we're trading right now 31. It's down about what 8% on the day. It's struggling. Yes, it's due to the same macro pressures that Bitcoin has, but it's even it's struggling. It's a harder struggle for Ethereum for the simple reason that there's not as much liquidity behind Ethereum as there is around Bitcoin. Now, the positive news is that their upgrade, the Fusaka upgrade, is incoming. The last upgrade pumped Ethereum up 58%. Now, the Fusaka drops December 3rd, and it's even bigger. All right, so L2 scaling, TX speed, network performance, it's all leveled up, man. So the chain is evolving, and the price is going to follow. The price will follow. It's gonna be a little bit of a grind, but we think Ethereum's going to go, man. Okay, again, join our pro group. And now here, hey, how do you do it? I'll show you how to do it right now. The link is in the description. You click this link right there. It's totally free to join. Free. Okay. We drop insane alpha and trading opportunities daily in that group. We have live streams. Okay, we got breakout setups, long-term gens. We got you covered. Hey, if you don't want to do that, we got two excellent brokers to choose from. The reason why we say that is because right now, WeX, low fees, fast execution, BTCC, low fees, fast execution. WeX is offering an incredible bonus through our link. All right, whereas they're giving like no fees for life. BTCC for smaller accounts, great option for you, giving you an extra $500. If you got $1,000 to trade with, guess what? You get a 50% increase right there. However, I do suggest that you join our free pro group, okay, where we could stack the stories and the profits and everything together. It's one big trading community, and it's a really cool place to be. Hey, it's up to you, right? Like I said, it's free. Anyway, let's go on to Bitcoin dominance. What's happening with Bitcoin dominance? This thing is driving me crazy. Sits at 60 all the time. Sits at 60. Now, we got rejections that were stacked. We got the rising wedge that has been cracked. The head and shoulders has been confirmed. Now, the altcoin window is slightly opening here. It's not there yet, but it's cracked. You could feel the little bit of breeze coming through. Just coming through lightly, okay? Smart money is starting to rotate. You got to pick good utility coins. You got to pick good utilities, okay? We come on over to we look at utility coins themselves, altcoins. You got to look like at ADA, your XRP, Solana, right now they're down anywhere between 8 and 12%. Riskier alts are down even more. Forget about memes, man. I don't get the whole meme thing, but if we look at the total market cap, global crypto market cap, 3.27 trillion, 6-month low. Fear and greed index, extreme fear, like something like 15 or 16. Don't even, unbelievable. But ETF outflows and whale selling accelerated the downtrend. They started rotating out. It's going to be a little bit, we're waiting for, this market cap actually it's testing the lower part of the wedge right now. This is a weekly chart. But they're following the same cycle. They always chop before they fly. They never, they always bore before they explode. So every green box was the start of a new alt season. Now we're entering the zone, but we got to be cautious with it. We got to be cautious with it. So what's the wrap up for today? Well, we got Bitcoin that is chopping around, and as I gave you the short-term levels, the horizontal lines, if we can get above the say 98,000, we could get a potential relief rally to 101,000. If we could hold that, we got a possible push towards the 103, 104. Now we got to watch for the ETF flows, right, to resume. So you got to pay attention to that BlackRock, that IBIT fund right there. Told you, we gave you the warning on that. Not like we didn't say that. I said didn't like it. Said that the black hats could push it down. Now let's talk about Ethereum itself. Ethereum holding tight right now. Um, if Ethereum can hold the 3,000 or 2,800, we could hold that. We can get a strong bounce potentially to 3,600. Now, if we look at altcoins, not all the same. Not the time to be a hero in altcoins. Let dominance stabilize. Watch for the leaders. Rotate a little bit early. So basically, this is where traders are made. We told you you're expending emotional capital right now. Make sure you come on over to X. Follow us on X. Where we talk about Bitcoin, crypto all day, every day, because we are crypto maniacs. Remember that it's not during the pumps that you're made as a trader. It's during the uncertainty. You got to stomach the volatility, okay? And that's why you should consider joining our free pro group. So what do you got to do? Well, you definitely got to do your own research. As you know, I am not a financial advisor. I am a trader just like you. Have a long-term objective. I have short-term trading ideas, okay? Next thing you got to do, you got to trade with your head not over it. Don't over-leverage yourself. That's what causes the pain, okay? Over-leveraging, okay? Next thing you got to do, well, you got to consider joining the free group. If not, you got to, as a short-term trader, you got to enjoy the party, but dance near the door. I'll see you tomorrow. Cheers.